Mail everybody, I'm Cantonese Cat. Hi everybody, Cantonese Cat here. Just want to go through a little bit about my thoughts about the market today. Not going to be taking too much of your time. So this is the 2-year yield. Everybody got freaked out because of PPI is about expectation. What does it even mean? Like none of that makes any sense. What are these acronyms? What expectations? Whose expectations? Why does it matter? Is inflation still going up? Is the Fed going to keep rates higher for longer? Is the Fed going to raise rates? I don't. First of all, I don't even know why like these discussions are had. Global liquidity is rising. That's the only thing that really matters. And I know that global liquidity is rising because Bitcoin's rising. Like this is somebody's printing a bunch of money into the system, is pumping into stocks and crypto, and rates is a secondary thing. If anything, if you continue to have high rates, you're actually putting more money into people's hands because if they have savings, they're going to make money out of it. And global liquidity is also rising. It's having higher rates not going to combat inflation. I mean, it's just what it is. In addition, I actually don't think that the rates of 2-year bond or 10-year bonds or any of those, I don't think they're really truly set by the Fed. Matter of fact, I think that these rates are reflecting true market conditions based on supply and demand of bonds in general. And the Fed is basically just following market conditions. They don't really do anything besides just trying to print money whenever they find an opportunity to do so. They're just going to keep printing a bunch of money because it's just what they do. If there's any deflationary forces that happens, for example, innovation, including AI, which is the big narrative right now, it could end up saving a lot of human resources. It could actually be a strong deflationary force that's going to come. And if it happens, then the Fed's going to get a chance to print even more money because of deflation. They're going to want to do that. So that's really the only thing the Fed does. I don't really see rates being high or being low to be that big of a deal. And if you're looking at true market condition, you look at real rates here. So for example, you look at the 2-year yields, you look at the rates for the 2-year bond, you can see that it's got a very much of a rolling over kind of look to it. I really don't think it's going to be higher for longer. It's already been long enough. If anything, I'm starting to see a lot of the technicals right around here that you can see it from previous cycle right before it plummets. I really am seeing, for example, I'm going to pull up a couple of technical stuff here. One of which that I like to pull up is the Ichimoku cloud. So if you pull up the Ichimoku cloud, you're going to get two lines. You're going to get the Tenkan, which is the red line right there, and you're going to get the Kijin, which is the blue line right here. Whenever the Tenkan's above the Kijin, you're going to see generally these things happen in the bull trend, and it happens once they have a bullish cross. You can see that rates went up pretty high from 2013 all the way up to 2018, which, by the way, what is the stock market doing at this time? The stock market is going up throughout this whole time. It did have a little bit of hiccups right here, actually, but matter of fact, when it was having a little bit of hiccup, rates actually dropped down a little bit. So throughout the entire bull cycle, really after great financial crisis, all the way up to 2018, rates were rising. There's actually increased level of liquidity out there. But anyway, regardless, you see rates dropping down pretty significantly once it starts to roll over here. If you zoom in a little bit, the Tenkan, once the yields drop below the Tenkan, it tried to backtest it once, twice, failed, dropped below the Kijin, and just plummeted. Went below the Ichimoku cloud. Over here, what's happening? What is happening right now with the yields? Drop below Tenkan, backtest it once, twice, 3 times. This is actually a 3rd time we're backtesting it. We're backtesting it a 3rd time right now. This is a monthly chart, so this is the 3rd one that we're trying to backtest the Tenkan. So far, it's just looking super weak right now. I just don't see why people are worried about rates going higher. Like it's almost like people are becoming bullish on rates right at resistance, which is not the way to do it. 10 years doing the same thing. 10 years basically also going through a very, very similar phase where it dropped below the Tenkan and is trying to back test, and so far is failing to do that. I think the more back tests and more it fails, it's got this rolling over look. It's going to drop down. It's going to plummet. 10-year yield is going to drop. What's that going to do? It's going to make more riskier assets, especially in the condition where global liquidity is rising. It's going to make more riskier assets such as small caps, ARK funds by Cathie Wood. It's going to make all those things to go up. The trend is not lying to you. I'll show you another indicator that I think is rolling over, which is the Bollinger Band. This is nothing fancy, Bollinger Band. You can see Bollinger Band is being squeezed right now. It's trying to find a direction for the next big move. Where's the next big move going to be? Most likely it's going to be down because there's the 20-month moving average for yields is rolling over. Most likely you're talking about a big move down when it happens, and it's going to expand the Bollinger Band just like over here. Rolling over, right? We're probably right around here. Rolling over, Bollinger expands, plummets. I wonder if we're seeing the same thing over here. Now, a lot of people are worried that the stock market and crypto and everything else is going to go to crap. And a lot of people are worried that if rates go down too fast, that it means that we're going to have a recession. I think it's a faulty thinking. I just think that rates could go down based on market conditions, but it doesn't necessarily mean that it is getting to a recession, especially since, again, I'm just going to keep talking about this, especially since global liquidity is rising. It looks like it's just started to happen. It looks like it's probably going to keep going for quite some time. What is the stock market doing? It's rising. The Bollinger Band is expanding and 20-month moving average is pointing up. This is the S&P 500. This is the QQQ, which reflects the NASDAQ. Bollinger Band is expanding. 20-month moving average is pointing up. If you want to do a triple leverage, you can look at TQQQ. I have a position in this. Is even the triple leverage QQQ is rising with the 20-month moving average, riding along the up Bollinger Band, and Bollinger Band is expanding, allowing price to go up even higher. ARK funds, what is it doing? Same thing, right? 20-month moving average is starting to curl up, and you're starting to see the trend change here. The Bollinger Band is pointing away from one another, is expanding a little bit, telling us that there's a little bit of a risk on sentiment right here. Just right around the time when the 2-year yield is about to plummet. Are we seeing a recession? Is the trend telling us that we're going to see a recession? Does it mean that you're going to have great deflationary forces in stocks and crypto? Certainly it doesn't look like it. What is the last one to go up? It's going to be the IWM. This is the Russell 2000 index fund, which is basically consists of a lot of the smaller cap stocks. This really tells you about the risk on sentiment. Right now, I think we're having a little bit of a rising 20-month moving average. This generally happens a little bit before the true big move is going to happen, which is going to be happening probably around here, and probably around here. You can see that once it happens, this stuff kind of goes on for 2 years, goes on for 2 years, goes on for, I would argue that it was trying to do it over here without COVID. I think it would have kept rising, so it's probably about 2 years. Right now, we're starting this process, and this could potentially go on for a couple of years. When this happens, generally it means that the risk on sentiment is even greater. Now, can this all of a sudden end up being a false kind of, bullish trend here? Sure. All it takes just maybe a couple of months of really, really bad, bearish breakdown here beneath the 20-month moving average for the whole trend to kind of reverse, right? Sure, it can happen, but I just see this being a cycle. Like if you look at over here, usually these things are kind of like a 3-year cycle kind of thing. And I think we're right about to start the bull cycle right here. I made a few charts to talk about the IWM. I think this is probably going to be the next thing that's going to go up. People talk about PPI today being hot, greater than expected, I think is all arbitrary. I think that some people are saying that the yields are overreacting, the market's overreacting. I don't think it's overreacting. I think it's just reacting like the way it's supposed to. It's just back testing a resistant level. Everybody get all scared. And that's just a part of the market. Like, whenever things get test resistance, everybody freaks out about it. I don't know why you should be freaked out about it, because it's at pretty strong resistance and the yield is looking weak. And over here, IWM, this is the Ichimoku cloud. On the monthly, it looks like it's about to have a bullish cross of the Tenkan and Kishin line right here. Once that happens, the last time it happened over here. Last time it happened over here, I argued without COVID, I think this thing was going to keep going up anyway. But eventually it had a bearish cross, but had a bullish cross soon after that, and it went up. Last time it happened before that over here, went up for 2 years. Last time it happened over here, ran up for 3 years. I think this is about to happen again. I think that this is a pretty bullish chart right here. And this is a pretty bullish development right here. I don't know whether or not there's going to be another black swan event like COVID. But based on psychoanalysis, just zoom out. It looks like we might be at the beginning of a bull cycle here again. Price bounced off the top of the Ichimoku cloud, went up. Price bounced back above the Ichimoku cloud right here, went up for 3 years. Price bounce went below that Ichimoku cloud, went back up, bounced from the top of the Ichimoku cloud, went up for another year. And right now we just had price breaking down into the Ichimoku cloud, went back up and bounced from the top of the cloud. This could happen for another 2 or 3 years. When this happens, when the IWM, when the Russell 2000 is doing well, you could have some pretty risk-on sentiment going on. With global liquidity rising, with the 2-year yields about to drop, with the 10-year yields about to drop, with the stock market already, doing pretty well, with Bitcoin hitting all-time highs, there are some pretty bullish developments that are happening over here. The crazy thing is right now, even though that, the bull market has started, people are still scared. I mean, I don't know, like the sentiment's actually not euphoric at all. You don't really see people really talking about getting into stocks and crypto. Maybe they're starting to talk about it, but the sentiment just really hasn't been that euphoric. Especially when you have stocks like Tesla, it just can't get it right. It just keeps on dropping. You got stocks like Tesla, and people are even talking about shorting it. It's going to go down a lot lower, and I just don't see that being that part of the market right now, which means that it's probably a good time to enter the market for me. I've been at the market for quite some time. I never really left, and I keep adding every week. This is not financial advice. I want you to do what's best for you. I'm just telling you what I see. This is also part of the reason why I think Bitcoin miners are going to do pretty well, because they're small cap stocks. I think a big part of the reason why they're being held back is because of some Bitcoin halving risks. But I also think the big part of the reason is because IWM, the small cap Russell 2000 stocks, they still are pretty far away from its all-time high. I think once you're able to get the bullish momentum going, that's when the smaller cap stocks like Fubo, like those really small cap stocks that was so crazy last cycle, all these Bitcoin miners, things like that, I think there's a good chance that they would continue to go up. That's the trend that I'm seeing. I'm following the trend. The trend can change, but right now the trend is pointing that direction, and I'm sticking with it for now. Thank you for listening. Have a good one. Bye.